Hey everybody, Greg here. Going to talk today about one of the most common questions I hear from folks out there getting ready to retire. And everybody wants to retire, right? You're tired of the work, you're tired of your coworkers, your body can't handle the strain anymore on it, or you're ready for a new challenge of some sort. But the big question is, what do we do about health insurance? It is by far and away the biggest challenge that retirees have to face if they're prior to age 65 when they can jump onto Medicare plans. So today I wanted to give you some insights on what I would recommend, things to think about or plans of actions to take. All right, so let's dive right in. The first option is that if you're going to retire early, does your employer offer any type of early retiree package or some sort of a plan that allows you to keep the benefits that you had from your employer until you reach age 65 and can jump onto Medicare? Now, why might this be advantageous? Well, first off, the benefits that you get from an employer plan are almost always going to be better than anything that you can go out and buy on your own. So if you can stay on that plan, even if you have to pay for it, a lot of times you're going to be in a much better place than what you would be having to go out and buy the coverage on your own accord. Okay. So you want to talk to your employer at least a couple of years prior to your retirement date to even see if that's an option. Another option kind of tied into that same employer plan is, could you go to more of a part-time position, or maybe a little bit of a pre-retiree transition plan where you only work a couple days a week, maybe 3 days a week at most, but you're able to maintain your benefits. It's part of our phased retirement plan. But a lot of times employers, if you're good at what you do, would be willing to offer that to you, allow you to keep your benefits, allow you to save some more money for retirement, but also have, say, Thursday through Mondays off so that you could go on some day trips, you'd have some more flexibility, and still maintain all those benefits. So ask about a phased retirement as well. And then the final option through your employer coverage is pretty simple, and that's, can you exercise your COBRA benefits? Now let me take a look here quick and see what COBRA stands for. It is the Consolidated Omnibus Budget Reconciliation Act. Yeah, a mouthful. But the long and short of it is this: you can extend your group employer coverage for up to 18 months. You have to pay the premiums on your own accord, but allows you to keep the same benefits that you had and not have to go out and buy your own type of coverage. All right. So can you COBRA through your existing employer plan to get you through age 65 where you can jump over to Medicare? All right. The final option is, do you have to go out and buy it on your own? And I can tell you right now, folks, doesn't matter what state you live in, there's not a ton of options for you to go and choose from when it comes to buying your own health insurance. All right, so the Affordable Health Care Act of, I think it was 2000, let me take a look here. Yeah, it was a handful of years ago when the Affordable Health Care Act came out. But what that does is it allows you to secure coverage, and you may or may not qualify for some sort of subsidy. All that's based on the amount of income you have. So again, depending on your situation, you might be able to qualify for some sort of a subsidy to reduce the premiums. But at the end of the day, the plan benefits just are not that great. I'll give you an example. We had a guy that had worked at Walmart for, I think it was close to 30 some years. And when we filled out the little pre-quoting tool to determine his subsidy, they estimated it over $1,500 a month in subsidy, which was going to drive him and his family's premium down to like $300-400 a month, very affordable. He was excited to jump on. Well, then as we went through the entire questionnaire, we ended up finding out that he only qualified for like $150 worth of subsidies, and his premium was now almost $2,000 a month. Well, guess what? He said, I'll just go without health insurance, because now that the mandate's gone, it didn't make any sense for him to try to secure coverage at that type of a price. So again, this is why it's so important to explore all your options that you can through your employer to find out if you can keep those benefits, even if you have to pay for them. In fact, we had another client that explored the COBRA options, and it was actually cheaper for them to stay on their group plan and pay full price than what it was for them to come over and buy a plan through us. So it's not a fun topic, folks. I get that, but I'm telling you, you need to take more of a stand on this and try to start talking to your employers a couple years prior to your retirement date to find out what your options are. And then finally, if you're fortunate enough to be over 65, you'll jump onto a Medicare plan. There's all sorts of rules that change year after year in that deal. But roughly, I tell folks when they're going into the retirement years, expect about $300 to $350 a month in premium, and that should consist of most all the expense you need for your health care today. So find a qualified agent on that, have them walk you through the different plan options. And if you're 64 or above, trust me, you're going to get bombarded with all sorts of mail. Don't get caught up in all that stuff. Go find somebody that you can trust and work with them to help you determine what your needs are at this stage of the game. So there's a little insight on health insurance. Make sure to check back and see more videos on how you can prepare or the things that you need to consider before you make the leap into retirement. Make it a great day, and we'll catch you soon.